We're here on the final trading day for the month of July, and the major U.S. stock averages are set for strong gains. Joining me ahead of a busy week is Peter Cardillo for Standard Financial. Peter, great to have you here.
Good to be back.
Well, we do have plenty of fundamentals to sift through before we get to Friday's jobs report, but today is the final trading session for the month, and we are set to see the second best month for 2017. So given all the event risk this week, including earnings, what are you focused on?
Well, now that the earnings season is not actually ending, but it's beginning to wind down. And, of course, we have one more major report that we'll all be going to be looking at, and that is Apple's report tomorrow. But basically, it's been a good earnings season, and so that's one less worry to worry about. I think now the focus, changes to obviously the macro news, and of course this week the unemployment data, and then of course the geopolitical and domestic political situation, which has not really triggered any signs of uncertainties in the market. Whether or not it will someday, I'm not sure, but I can tell you one thing, that gold has been quietly creeping up, and it's at pretty high levels, and I suspect that a good part of that is due to these geopolitical and political uncertainties here at home.
Well, you've covered a lot of ground there, including commodities as well as your Fed rate outlook. We have that jobs report coming up at the end of this week. And as you mentioned, earnings have been coming in mostly better than expected. But given what's happening in Washington, D.C., some of those expectations regarding the Trump administration's plan for infrastructure spending, healthcare, as well as tax reform have been delayed. So how do you see that playing out the rest of this year?
As I said at the beginning of the interview, the market seems to ignore all of that. And whether or not it will continue, who knows? Maybe someday the market will wake up to the fact that the administration so far just can't govern. The market is, I would imagine, interpreting it as a plus, because it's basically creating a gridlock situation. And a gridlock situation is always good for the market, because you're not going anywhere as long as the basic fundamentals are in place, and they are in place. Earnings are good. The economy is growing, maybe not at a gangbuster rate, but certainly growing, producing enough of jobs. This week, we're looking for non-farms to move up by 188,000, with total unemployment basically holding steady from last month's reading. So it's sort of like a real good situation from a fundamental perspective, from a technical perspective. And until that situation changes, then I suspect that at best you're going to see some minor pullbacks, with the market continuing to do what it has been doing.
Okay, Peter, well, thank you so much for joining me at the beginning of the week, and thanks for your insight as always.
My pleasure.